Yo, what's up everyone, the Wise Trader here, and today I'm going to make a video on market structure and how to follow the market and order flow delivery instead of entering pointless buys and sells in the market which gets you taken out straight away. I'm also going to be doing a trade breakdown while making this video. It's a 1 to 21 risk to reward trade that I took last week and held, which each take profits for 21% during the London and New York cross when the volume started kicking in. Without wasting time, let's jump into it. Alright, this was a trade here. As you can see, it's 1 to 21 risk to reward, but I'll be going over a new chart. First, I took a look at the daily time frame, and clearly it was bearish. We had multiple break of structure. We had break of structure here, and we had break of structure downwards to show the clear bearishness of the market. Then I step down to the H4 time frame, and you also see break of structure here, break of market structure here, and another clear break of structure here. At the current time, I was not seeing any of this. None of this was showing. Okay, here's proof that I entered the trade. Here's proof that I predicted this trade. This is it. As you can see, looking for potential shots here. So I took a buy up to hedge a sell. I took my profit here and plan to enter a sell here, and that's what happened perfectly. So we're not seeing any of this here. What did I see? Number one, I saw a clear break of structure here. Order flow started kicking in, and another break of structure here. So you can see how the market's respecting order blocks here. See, market mitigating this, breaking structure, another order block here. So the supply chain is holding. Breaking structure multiple times. I couldn't say anything here. After this multiple break of structure, basically what you need is so that's basically what I use. I'll be making a full breakdown of how to understand market structure later on. So this is what I just used: daily H4 and M15. You can see the order block here, the order block. So we'll drop down to the M15 time frame. Let's see. So I also trade strong highs and strong lows, where the big money is stepping into the market and making big moves. So as you can see, this high took liquidity from here. This high liquidated this part and dropped and broke internal structure. It took out this internal structure and also took out this low. It also took out this low. So this is my most recent break of structure. So this other break of structures does not matter anymore. They are now invalid. So this was the high I was looking to work with. So for my refined zone, you can see in the image, I kept this zone. You can see X as liquidity. You also need to understand liquidity. I'll not be going over that in this video. I'll be explaining it in my future videos. So make sure you subscribe, click the like button and notification bell so you'll be notified anytime I release a new video. I picked this POI. This was the liquidity, because you need liquidity to be fed into your point of interest. So this is my refined zone, or my POI, whatever you call it. So this is it. You can see how price tapped into it and dropped. I'll be explaining my entry. You also need to understand the daily cycle of price. You can see the large impulse here, and you can see the corrective nature of price upward, building liquidity upward, feeding liquidity, and also liquidating these other highs here. So you can see the corrective nature of price upward, creating trendline liquidity and more. feeding it into our POI. You need experienced trade counter movements, but for the impulses you can easily catch them. So for my entry, I dropped down to the M1 when price came into my zone. Let me delete this. I dropped to the M1. Before I go over that, what price did was that price engineered liquidity here. I call this inducement because price did not tap into this H4 order block. Okay, let's go over to the 15 minutes. You will see that better there. Price never tapped into this order block, as you can see, our H4 order block, but price came on towards break structure. So immediately I saw this, I was happy because it's what inducement. Price actually reacted here for buyers to step into the market, and it took them out. You can see this sharp movement, taking out liquidity and what dropping down. So price broke this structure here. Price broke structure. So this what inducement. So this not just inducement, this alright, Asia high inducement. So this is the liquidity that we have to take out. I did not enter this trade upward here. I could have from the lower time frames and quick scalp, but I didn't. I just waited for this for price coming to my POI and did my thing. Don't chase price. Be patient for price coming to your zone. The market pays people that are patient. Alright, so when price tapped into my zone and I grabbed this liquidity, I was happy, and I knew that price will come for this H4 liquidity here. As you can see, a building trend line liquidity here. So price was coming for that. So in M15, price tapped into my zone. I dropped down to the M1 time frame. I dropped down into the M1 time frame and wait for price to give my confirmation entry. You can use chalk, whatever you use, but I use change of character, and this was the break of structure. This was the change of character here. This was the change of character. So I was happy with this because you can see the impulsiveness. Price used to break this low. This low took this high. Price came up, break down, and broke structure up. This low took this high. So I'm expecting it to hold and continue higher. But rather, big money are stepping into the market and they broke this low. So what I was expecting for them to come back, mitigate their zones, and continue. So that's exactly what I did. I used this wick here. If you look closely, you will see on its own that this wick is strong high in lower time frames, like 30 seconds, because it's clearly liquidated these two highs and broke structure here. So you just have to understand the freakdown nature of price and movement of price. Be sure to subscribe to this channel because you'll learn a lot for free. Alright, so this was where I entered off short from here. Place entry here. My stop loss above this high. So it was a 4 pips stop loss. Yeah, it's 4 pips. I just put it slightly above the high. And where did I target? My first target was at this low here. Why was it there? Because when we are dealing with price, we deal with the fractal nature. You see, this is the swing low that took out this high. It has not been mitigated, so price could just tap into it and skyrocket up. So this is the break of structure here. It's created this break of structure that sponsored price up. I know we have to wait for price to switch bearish for us to what? Trade the pullback, then trade the continuation. But we know that our higher time frame bias is what bearish, and we don't want to be taking buys like this at premium price because this is premium. Yeah, I'll also be recording videos in the future about what premium and discount too. So make sure you subscribe to this channel now and turn on the notification bell. So this was my first target here. You can see it's 1 to 9. So at this point I took out just 30%, just 30% of the trade, because I was very confident that after price liquidates this sort of places to come very lower to take out this whole liquidity here. this liquidity we're building up here. So that's what I did. So I entered, and this was my first target. Took out 30% here, then left the rest to swing, and I targeted the weak H4 low. I targeted the weak H4 low, which was this low here. Okay, let me clear some stuff out. Alright, I targeted the weak H4 low, swing low. You know, this was our swing high, H4 swing high. So I targeted the weak H4 swing low because it's failed to take out the high. So that was my final target here. So you can see it's a 27% ball. In all, it accumulated to be around 21% because of the 30% I took. And you can see my price took out the zone around the London and New York cross. That's between 12 to 1 because our volume started kicking in the market and all this happened. Alright, thanks for watching this. Be sure to subscribe, like the video, because I'll be dropping a lot for you guys for free in this channel. Entry, management, psychology, everything you need to be successful in trading. All you need to do is click the subscribe button, like the video. You can drop your comments below. I'll be sure to reply all the comments. I'll check all the comments and reply all of them, and I'll answer the questions. So with that being said, thank you and see you in the next video.